Creating a monthly budget is a key component of managing your business finances, ensuring what you care about most in your program is possible. This resource includes 4 simple steps to build a monthly budget, plus easy-to-use templates to track spending. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. In today's conversation, we will explore the benefits of maintaining a monthly budget, what financial information you need to build a budget, and how to get started. An annual budget is a critical tool for managing your childcare business. It helps you plan for what you will spend and monitor your actual revenue and expenses to keep you on track. However, a year-long budget may seem out of reach now, given ever-shifting costs and variable revenue. Starting your budgeting process with a monthly time frame can provide a foundation to build on and help manage any necessary adjustments as you move forward. In this video, we will take you step by step through the process of creating and tracking a monthly budget, providing a budget tool that will help assist during times of uncertainty. Once you get the hang of this exercise, you will likely want to make it one of your monthly business habits and be a starting point for longer-term budgets in the future. Building a budget includes 4 easy steps. Gather information, list income, list expenses, and track actuals and build the next month. Step 1. Gather documentation. Pull 2 to 3 months of documents that show your income and expenses. Here are a few documents showing income and expenses that can give you the information you need. Bank statements, credit card statements, Venmo transactions, utility bills, any other records of ways that you receive or spend money. Try to use actual amounts of your income and your costs when possible for greater accuracy. If you don't have actual amounts for everything, it's okay to use an average. For example, you might need to use your average electric bill because you don't know exactly how much electricity you'll use over the month. It may be a good idea to find that average, then round up, as budget items typically do not get cheaper, and it adds a tiny bit of cushion into your budget. Step 2. List income. To determine an accurate monthly income, you will first need to calculate the money you will bring in based on the number of children at different rates. There are supporting materials with this video that will help you calculate your monthly revenue from fees based on the different rates you might offer. Some income categories to consider. Subsidy. Fees, including, for example, parent tuition, late payment fees, registration fees, supply fees, etc. Grants, and other, such as food program, also known as the Child and Adult Care Food Program, if applicable. Now that you've determined the money that comes in from fees each month, enter it in the monthly budget tool next to the fees box. You can find this tool with the supporting materials included with this video, then you will want to categorize the other money that comes in each month. Be sure to always include an other category. Here is an example of one of the supporting materials provided with this video. You can use this table to help you calculate your monthly revenue from your childcare program fees. Step 3 is to list expenses. Categorize money that goes out each month, and be sure to list all of your expenses. There is another supporting material with this video that can help you do this. Again, be sure to list an other category to accurately capture all of your expenses. Step 4. Track actuals and build the next month. Now you have your monthly budget in the planned column. Before you start for the month, find your planned profit by taking all your revenue and subtracting your expenses. If it is positive, that's the money you are estimating you will have at the end of the month. If it is negative, you are going to run at a loss this month, so you will need extra money to get by. Now you need to track what you are really getting and spending in the month in the actual column. As you know expenses or revenue, write them in. At the end of the month, if you subtract your actual revenue from your actual expenses, you will know how much money you made or needed to make up to stay open. Here is an example of one of the supporting materials provided with this video. You can use this table to help you calculate your monthly budget using the strategies presented. You can aim to build your budget over time, monthly, quarterly, 6 months, and eventually annually if it is helpful, particularly if you are new to budgeting. In the third week of the month, prepare your budget for the next month. For example, in the third week of January, make your February budget. Use the actual revenue and expenses from the current month to guide you. For example, if you see a cost increase that you didn't expect, make sure you increase it on your budget. This way, you can use your actual numbers to adjust as needed. For more information, visit the Child Care Collaborative of Iowa website or email fmc@midsu.org.